Welcome out to Tackle Trading's halftime report, where we break down the market activity, the indexes, talk a little bit about sectors. We're going to go through earnings. Guess what, Frankie? No earnings today. I
It
can't
is
wait for
exciting.
that. It was so exciting. I was doing my daily routine today, and I know I'm in my introduction. I don't care. But I'm doing my scanning today, and I'm like, whoa, 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 whoa. There's not an earnings I'm that interested in today. And that was the sign of the end of the previous earnings season. And I can't wait to get ready for the next one that starts in about 6 weeks from now. So we'll have a little bit of reprieve. But this is Friday, November 12th. I got Coach Frank Martin here from Frank's Charts, and does a great job on Tackle Trading's Twitter account as well. Frank, let's jump right into it. But first and foremost, how are you today?
I am doing fantastic. You nailed it. Earnings are behind me. I absolutely can wait until next earnings season. I am in no rush whatsoever. It was fantastic not to run into. I think there's two setups I ran into that were invalidated due to earnings. That's always the case, though, right?
Well, and to be fair, okay, we're gonna do a little Frank's Charts later, and we're gonna do Frank one, me one, and we're gonna go back and forth with the type of charts we're looking at. Frank, after I saw there was no earnings I was interested in today, I didn't check for earnings in my scanning. So I might be shocked. I might be a little surprised, but I'm like, oh man, great pattern, bad earnings times. But for the most part, we are done. It's been a fantastic earnings season, both from a fundamental and a technical perspective. Now we're talking post earnings here, Frankie. The market's been a little bit choppy this week after a very good upward movement in price, a traditional leg up in the market over the course of the last month or so during earnings season. Frank, what's your read on the market right now as we've kind of navigated that pullback, and now we're looking at a little bit of confirmation here on a Friday? What's your read?
Yeah, and for what it's worth, I mean that's pretty much across the board. You're seeing it in all the indexes, right? To the pullback confirmation here today. You're seeing it in all sorts of things from a sector and an industry perspective. So technically, it looks really, really solid. I think you have to just go with the chart and say, hey, this looks like a really good pullback opportunity. I know I had a lot of things hit entry points, some yesterday, but more were hitting today, which is, never my favorite day. But what are you going to do? Not going to complain too much about that. I think you're looking at you're just basic retracement candidates. Expect the next leg up. I mean, the stock, the market had an opportunity to. I mean, it was running hot, right? We were above the nine
Yeah.
for what, 3 weeks in a row. Of no surprise that eventually the when, I'm never going to try to guess the when, but of course, inevitably there was going to be that pullback. That's a good thing, right? That's a healthy part of the market. I think you like the development. We can see where we close here,
Yeah.
going into the weekend, but certainly as it looks right now, I think you're calling, today's, candle confirmation and any upward movement going into early next week as the follow through that maybe if you're a little more conservative, want to see a little bit more that maybe you're looking for.
Yeah, you always want to wait for the end of the day to call something confirmation, Frankie. But a lot of times when you and I are talking here on a Friday, the last halftime report we do throughout the week at Tackle Trading, you see a lot of the final print is a very similar price threshold to what we're looking at right now. So we're going to wait for the end of the day to call confirmation, but it does look like we're going to see some degree of confirmation off this flag. And I do like the consistency of this pullback here, Frankie. You see this nice little trend line punching down in that 2 to 3 day flag based pattern. You really start seeing that upward movement in price there. And then you kind of stick the landing over the next 24 hours or so as you come into this support level on the overnight action. You got this, and we talked about this number yesterday, Frankie. You got that resistance zone right there, old support, resistance. Look what happens here today, right around that cash, right after that cash open. Just pound the table there. You see that breakout against that 46.60 level. Nice breakout from an intraday perspective. That's why I say you got to look at this as a confirmation against that previous bullish flag-based pattern. And the first time we have tested the 9 EMA in this very, very good run the market has been enjoying. Frank, as you look at this as a potential confirmation day coming into the weekend, does your confidence increase coming in to that Monday cash open? You get excited a little bit, but do you still got a little hesitation given that the futures market does open up on a Sunday?
No more than normal,
Yeah.
this was, I guess, confirmation for me. As we were pulling back, in the earlier part of the week, I felt that the most likely outcome was a good little buying opportunity developing. We'll have to see. We're only, shortly into it, right? Only time will tell, but it kind of already confirmed my personal bias going into it. So I always believe in checking the futures. I always would rather tomorrow be a market day, right?
Yeah.
As a trader, not as a lazy video game player and things like that, but as a trader, I definitely always like tomorrow to be open so we can continue that. But it's no
Hmm.
real concern. It's just, of course, you want to check it, make sure, but it would not stop me from building any trade going into next week by any means.
Yeah, I'm with you on that as well. And it's one thing for support to hold here. We were expecting support to hold, whether it was the 9 EMA or if it came down into that 20 period SMA. We did expect support to hold. The entire market participants
Yep.
expected support to hold. But it's another thing to break resistance. So from when it comes to the rankings that tackle trading, we're looking at the S&P 500. We rank it every single week in the Tackle Trading newsletter for our pro member community. Right now, that market is ranked at about a 15 handle, which is a positive 2 ranking for tackle trading. And when you rank that from a tier perspective, you have +1, +2, +3. And so you're seeing over time the confidence level in the bullish positions increase. This week, this is the first time we've seen a little bit of test against that support levels. You're seeing a little bit of shift in volatility. And even though I like the confirmation here today, and I'm 100% with you. Market was a little bit overextended. This week's a little reprieve in that capacity. So, from a ranking perspective, though, you love the pattern, but I don't think you love the trend more than you loved it last week. I'm looking at a very similar ranking for me, Frank. What about you, though?
I am 100% with you there. It is one of those that you like the setup, you like the opportunity going into next week, but I don't think it did anything that says you got to upgrade this,
Yeah.
right? It's one of those type of situations. We didn't break resistance, the trend hasn't changed, we got confirmation, great, but that's just really more of the same, right? That was you kind of doing the bare minimum here, right? It's hard to
Yeah.
want to upgrade. I mean, I've never upgraded a sector or a market in ±3 territory, right? And I probably never will.
I'm
I
not
know,
I'm not that guy.
yeah, it's
Yeah,
not
I'm
who
not that
we're
guy.
really we are
Not the
at
market,
Tackle
an individual
Trading,
stock,
right? Stock, sure, but even
absolutely,
a
but not the
sector, right?
market.
It's super. I think we did it once or twice. It's super, super rare. You got to do a lot to make me want to upgrade you from 15 to anything, right? That's a very bullish ranking for me personally, and we really didn't change. Again, it was just kind of you did what you were supposed to.
Hmm.
Maybe people love the way it happened. Maybe you prefer it happened a different way. But ultimately, we're really in the same exact spot that we were last week at this time, I think.
Yeah, you're in the same spot. The difference is you're not at resistance. You were at support. You've had a little bit of consolidation. The RSI has contracted a little bit, not too much, but a little bit to give that overextended nature a little bit of reprieve. But I'm right there with you. I like the market. I think the confidence in the market is there. There's been nothing that I've seen from a technical perspective to come off that ranking. But as an upgrade, again, it's one thing for support to hold. It's another thing for it to break resistance here and to start seeing additional momentum. And that's what I think you got to look for when you're looking at a fairly bullish ranking and you're looking at upgrading that fairly bullish ranking. I think you got to see something in addition to what we have been seeing. And right now you're looking at a little bit of slowing momentum. I think you got to wait for that market to pick back up some steam with the breakout because those risk graphs, Frankie, are already opened up at a
Yeah,
15 handle. It's not like you're being conservative with a 15 ranking at tackle trading. That's a fairly
exactly.
aggressive ranking for us from a market perspective. And so I'm kind of right there with you as well. Frank, we have been looking at the market do very, very similar things this week, regardless of whether you were looking at the S&P, the NASDAQ, the Dow Jones, or the Russell 2000. So when we're looking at the NASDAQ, very similar flag-based pattern. When you're looking at the Dow Jones, very similar flag-based pattern here. Hasn't confirmed there on the Dow Jones. And then obviously Russell 2000 looking like a fairly similar picture. Frank, this market has seemingly, over the course of the last 3 weeks, just trended together.
Yeah,
Like the entire marketplace,
index wise for sure.
index wise. but I'm starting to see a little separation at the sector level. Do you anticipate these indexes separating as well over the next couple weeks as we're starting to see a little separation from the sector perspective?
I think so, but probably not as much as we've seen from a sector point of view.
Mm-hmm.
Right? I don't think they'll separate from one another quite that much, but I do think we'll start to see a little more theme, whatever that might be, whether it's
Mm-hmm.
growth or cyclical or what defensive, whatever it is. I do think that that's not an unreasonable expectation that we will see a little bit of separation. Broadly speaking, no.
Yeah.
I really don't, but definitely
I haven't seen
noticeable
it in
from
the
a
charts yet.
trading. Not really. I mean, you've seen maybe in little sideways chop on the top for energy and on the bottom for communications, but
Oh yeah.
for the most
Sectors,
part,
yeah, but
yeah,
indexes, yeah.
for the most part, it's even the sectors aren't that separated in a lot of to a lot of degree. So right now, I think you are playing just the market, right? But I do
Well,
think as we move forward, there always is eventually separation, right?
there always is, right? But again, whenever you come through reversal analysis, a lot of times markets are just going to just churn together,
Yep.
right? Because it's being driven by the same type of theme. And whereas from really kind of May, June, July, August, September, this market never really had a theme that it was playing together. It wasn't ever singing the same song or dancing the same dance. It was moving on micro themes to a certain extent, but you never really had that major theme that the market was just driving on. Well,
Right.
coming through this reversal that preceded the earnings season, and then that growth storyline that the market attached itself to overcome some of the current economic and valuation concerns that a lot of individuals have, and rightly so. Until that occurred over the last 5 6 weeks, you really never had something that the market simply attached itself to.
Mm-hmm.
It has over the last 5 to 6 weeks, and a lot of that to me is a little bit of the seasonality as
Yep.
well playing out, where we're coming through one of the most. There's pockets of seasonality in everything, but again, seasonality is just an indicator. But one of those very strong seasonality indicators is that of the Santa Claus rally, Santa Claus coming to town, and this theme that has a tendency to play out. I think that's playing a role here as well,
For
with all
sure.
the markets really kind of churning together as well. When we're looking at this sector level, let's take a look at a couple of these sectors. And once again, at Tackle Trading, we categorize growth, cyclical, as well as defensive. Frankie, when you're looking at some of the sectors that have been just the hottest sectors in the market, we're really talking about the number one sector in the market right now, and that is discretionary, on the backs of a lot of what is happening with Tesla over the last 5 weeks. And I got discretionary moving kind of in line with what Tesla is doing as well. Frankie, the market in discretionary was completely overextended coming into this week. Can we all just accept that one commonality?
I think everyone would agree.
Okay.
Maybe to what extent we might
Well,
argue, but
in
not
America, that's
broadly.
kind of hard to get everybody to agree on
Yes, we're going
something,
to
even,
agree
even if
enough.
it's staring at us in the face, right? So, but today, I don't think you have that same philosophy that this is an overextended scenario, given the fact that we've seen the increasing volatility. You've gotten the pullback here, and a pullback, legitimate pullback, coming down underneath the 9, right in that bull zone between the rising 9 and the rising 20. Obviously, looking at a fairly strong ranking given the backdrop of discretionary, it was right there at the 10 handle. Is this something you're looking at as a buying opportunity, or is there a little bit more concern in this pullback than we otherwise would be looking at?
Both, if that's a fair answer.
It is. It
I
is.
always prefer things to be above the 9. I am very much a believer in the 9 is momentum.
You're a momentum trader.
That. So I'm notorious. I don't really like the deeper, and not that this is that deep, but it is deeper than a pullback to the 9, right? A deeper
Hmm.
type of retracement. So it always does. I always wonder, well, the first sign, and that
By the
maybe
way,
it's
Frankie, I wouldn't call it that deep,
no,
right?
no, 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 no. It's not deep at
But
all.
it's deeper relative to kind of the current price action was over the
Right.
last couple weeks. So,
And
but
probably more important, it's deeper than I would like, right? Because I can
which
only
is that
speak for
9,
me,
right?
right, as far
Yeah,
as
which
who
is
I
that
am.
9.
as a trader. So it always is it's always just a mental, kind of note. Okay, well, this is the first time we broke below the 9 in a long time. It probably doesn't mean anything, but if it does, the first step towards it meaning something is failing at the 9, right? And
Hmm.
so it's one of those. I'll feel a little bit better with some development. I really wouldn't mind seeing a little back and forth action, in the first half of next week, and then get some upward movement. That would definitely make me feel a little bit better. I am, though, however, of course, still looking at that, broadly speaking, as a buying opportunity. The trend's still rock solid. It's
Hmm.
more about how I would like to get involved with it, right? As opposed
Yeah.
to, if you blindly said, Frank, you buying or selling XLY on Monday morning, it's an easy answer for me. It's an easy buy. If I had to
Especially
bet,
above 206.
yeah, I mean, of course I would. That's a great trend overall, and my picky nature of what my entry should be notwithstanding, it's still a great looking trend, right?
Well, I think you're treating discretionary as just your pullback analysis, right?
Yep,
Your flag, your
your
retracement, your
traditional
deeper
pullback analysis. Yep.
retracement. And when you're in pullback analysis, you're really looking at the daily chart and you're saying, okay, where historically are those key levels of support that typically do form, right? You got your momentum at the 9. You got your traditional 20 period moving average retracement where it's more in that bullish retracement type analysis. And then you got your deeper retracements that come underneath, certain Fibonacci numbers. For example, the Fibonacci 50% level coming into that 61% level. And so you got your different variations of pullbacks. But the commonality on all pullbacks is the same. You're looking at your backdrop is the daily chart of where those support levels could form, but you're really looking at the intraday analysis to see where in live action where the market is really pricing in support. And so when you're looking at discretionary, I do think you're staring at a downgrade. I think you got to respect the movement to the downside,
Hmm.
especially with what is happening with Tesla right now and how many shares is Elon really selling and how much puppet mastering is he going to be trying to play as he just tries to sell his shares to
Right.
pay down some tax burden. I don't understand why this has to be anything more than him just paying some debt off. Like it doesn't have to be a major storyline. But every day, oh, Elon's dumping more shares, and so that's creating a little bit of increasing volatility here. But to me, you're just looking at this as a saying, okay, you're in the bull zone. Is the market showing you it's building support? And it absolutely is. So
Absolutely.
far, you're starting to see support come in right there at that 200-day moving average on the 1 hour chart. But the simple reality, though, Frankie, is you got a double top action here right around that 206 level, and
Mm.
that's why I said, you know what? I don't know if this is the buyer's opportunity yet. It's certainly in that zone. Would you agree
Sure.
with
I
that?
would absolutely agree. If this is
Right?
where it starts, not surprising at all.
Exactly. It's certainly in that zone, but I think you just got to, in this marketplace, I do think a confirmation is important. I do think confirmation is important. And so I'd like to see it. I'd like to see those buyers come in, not at support. I'd like to see those day traders come in above 206. That
Exactly.
confirmation would give me confidence in this price movement to get back up to the top side. What's your thoughts?
Exactly. And if we could get, 1 or 2 days next week kind of trading between this support and resistance zone and then ultimately breaking out, that would be
Yeah.
really great confirmation. But you're
Show a little
absolutely right. So
stabilization.
little, let's just
Yeah.
hold this floor and see that upward movement. It always makes trades for me at least a little easier too if you have a little bit more time, especially on these deeper pullbacks. But I think that intraday analysis is very important because really at the end of the day, whatever the retracement is, all we're really thinking is that it's just a short-term downtrend within the longer-term uptrend. And as soon as those two time frames align again, we can get going. We're just still
Yeah.
waiting for those two time frames to align. Could it happen here? We're starting to see the signs, but I am 100% with you. We need to break resistance to get that confirmation that this is that location that we can really start to believe in.
I agree. Technology, we already kind of talked about, is doing the exact same thing as the actual marketplace is. So we'll shelve that conversation. I do want to talk a little bit about communications here, Frankie. Com seemingly cannot get its act together enough to finally break out of that 82 handle. It held earlier this week. We're back down into that support handles. Frankie, what's your read on communications? And is this just a hey guys, enjoy the cash flow until it breaks out type environment?
Yes, it is. Maybe I like it a teeny bit more today than I did over the last few weeks.
But not enough to touch that
But
ranking at 45.
not enough to touch that. I mean, maybe we can have and I think it's probably a fair debate to have is could this, if we were a little closer, obviously we're too far away. If we're a little closer to that resistance, we probably would have that 40 argument, right? But being this far away, we haven't done anything. We're just stabilizing. Enjoy that cash flow. The charts still don't look great. Facebook
No,
is
they don't.
starting to show, or whatever their new name is, Meta Platforms. I guess that's going to take a while, if
Metaverse
ever.
is,
It never worked out
yeah.
for Google, right? They're still Google. Google still looks okay, but you're still seeing a lot of work to do in the Verizons of the world, the Charters, the Comcast, obviously Disney's
Well,
earnings debacle. So it's still a lot of work to do in so many of the components within that space.
Well, and just to kind of talk a little bit about what you were mentioning there, Frankie, you take a look at Verizon. And again, when you're looking at a sector, you kind of know where the strength is in this sector, and it starts with Google.
Mm-hmm.
Google up against the all-time high, the rest of the sector not doing very well against the actual market itself. But I don't see this sector getting better until the bottom of this sector starts to stabilize and get better. And the bottom of this sector is absolutely Verizon. It's absolutely AT&T. It's absolutely Charter Communications. It's absolutely companies like Activision. These types of companies that have been underperforming the rest of the broad market for not just this month and not just this recovery the market has had, falling a little bit of a bout in volatility in September. It's been underperforming the market all year long.
Yeah.
And so I really don't see this sector picking up steam and getting back into those same degree of rankings that we've seen with discretionary, we've seen with technology until the bottom of this area, the market stabilizes. And you're seeing the beginnings of it, Frankie.
Yeah, maybe
you
you're
are
seeing some
seeing the
signs.
beginnings of it. But, for example, Activision. Activision had a horrific earnings report. And the market got it right on the gap down. But it's just starting a little bit of a gap fill. I wouldn't call this a reversal, would you?
No.
Not
It's
in
the
any
first,
capacity yet.
not at all.
But it's a first step in a potential
it is the
reversal.
first step. This is the first thing that has to happen for it. Yeah. You just have so
But
much
we only
work to
got
do.
1, 2, 3, 4, 5, 6. We got more steps in that reversal. And
We've
so
got plenty of steps in that dance. And while Activision is, maybe particularly ugly because of that disastrous
I
response
just
to
wanted to
that,
pull it up, just to remind people how bad Activision's earnings was.
it was, I'm all right with it. I'm all right with it.
Get it together, Activision.
This market, there are so many opportunities for us in so many different sectors and industries that I am not going to try to be the cleverest guy in town and pick the bottom in anything, certainly not in communications. I've been off of them just like the rest of us here at Tackle for a long time. I don't know when I'll get back onto them. I will. There will come a day where they're my favorite again. I will just let that day
Comps will
be.
have its day in the sun. It will.
Yeah, it will have its opportunity. Just
But
it's not this week in my
what
mind.
has to occur before it has that opportunity to have its day in the sun? It's got to break a resistance level. I mean, it has to break.
If you don't break any resistance,
level.
how far are you going up?
It doesn't matter anything. And I kind of have that same philosophy on comms here that I have on crude oil a little bit. We'll talk about crude oil hovering around that $80 mark here in a second, but 80 to 82 and a half, don't care.
Yeah.
Right? Don't care. If it breaks 82 and a half, we know it's going to be based on a little bit of the AT&Ts, the Verizons, the Charters, the Activisions of the world, the Disneys of the world that have had horrible underperforming nature against the market for months now. We know that has to stabilize. We know that has to slow down and start showing reversal analysis. And we're seeing a little bit of the early stages of that. But again, I just don't think that has I don't think there's anything to see here until we see an 82 and a half breakout.
Yeah, I'm 100% with you. Wake me up when we come out of this range. And even then, you're going to be stacked up against everything else in the market. So it's not
there could be some dogs of the Dow theory on comms, though. But
there could.
Yeah.
I'm
with you, though.
I'm with you because what happens is you're going to have Google and Facebook playing ball because they're such huge representatives of that sector, right?
Mm-hmm.
So it really can't go without them, but it is going to need some of the bottom feeders to start contributing as well. So it could be a good sign when we get it. We're just not there yet.
Frankie, last week we were sitting here in the halftime report, you and I, we were talking about the cyclical areas of the market, that of energy, basic material, industrial, and finance. And we're looking at an environment last week where Well, they're all kind of 25. Some are, picking up momentum. Some are contracting and losing momentum. And we said this last week, said, hey, these are separating. Right now, it's just a weird convergence of 25s.
Yep.
But what's happening is they're actually separating, and you got some downgrades versus some upgrades. One of those areas that has been being upgraded over the course of the last few weeks is the material space. I'm looking at an upgrade here, Frankie. I love the price movement, gapped out to start the week, maintained intraday analysis all week long, inside candles coming into the end of the week. I got this now as a high base breakout, Frankie. What's your read of the material space, and is this an upgrade for you as it is for me?
This is probably the easiest upgrade in the market for me this week.
Yeah.
I mean, that was a good, solid break. We did get the gap up on, to kick the week off. We've got follow through. We held our own during kind of the midweek, chop. We're going to close at an all time high on XLB. Gold is playing ball. Silver's been doing well. You're seeing the chemicals. There's some interest,
Chemicals shoring up.
it is participation really throughout all of the different industries within the space.
Can I give you a couple stocks very quickly?
Of course
here?
you can. Of course
and
you
I
can.
And I know you have Frank's charts, and so I don't want to steal any of your thunder. I don't know what stocks you have, but I just want to give you a couple of stocks because it is broadly from an industry's perspective. It's not like one industry here is really leading the charge, because it's not like inflation only impacts one industry in basic materials. And so when you're talking about the material space, Frankie, you talked a little bit about the industrial metals. Let me show you a little bit of FCX breakout against $40 there. You got to like that breakout. The only question is, has it ran too much? I don't think so.
Yeah, I mean, that's the question. Can you map out a trade? Because that
I
is
think you
absolutely
can.
a bullish signal, right?
Yeah.
And so, yep, 100%.
And we've been looking at that $39 to $40 breakout in FCX. That is a prolonged resistance level. You got to like that. What about little building companies here, Frankie? What about Vulcan Materials? Nice little snapback, bullish retracement. You talked about you love the 9. I kind of think this stock, Vulcan here, loves the 9 as well. What's your thought on this retracement?
Yes, and yes, please. I do very much like that. I love that we've stabilized. This is going to give us great risk to reward. We broke out a major resistance. So this is the first pullback after that double, triple top breakout that we had. Yeah, absolutely. And even if you don't agree with me, that's fine. Nobody's probably looking to go short this chart, right? So
I would hope not. I would hope
that's
not.
a beauty.
Well, and you talked about the chemical companies and specifically the special chemical companies. Well, we like Lynn here. You got a high base scenario on Lynn with the potential breakout of 340. But I also kind of like Sherwin here on a little bit of a breakout against the resistance, maybe a little bit overextended here. But just want to pull up a couple examples, because when I was scanning, sometimes you'll see an industry just take charge and really drive that sector, right?
Yeah.
And you see it in healthcare all the time. Healthcare is probably the number one for me.
Yeah.
With that
Here
specific,
too, though, you see specialty chemicals carrying this a lot
here.
too. Yeah.
Yeah. But that's not my read here in the
I'm with you.
material space. I got building materials doing great. I got specialty chemical companies solidifying themselves and showing momentum. Chemical companies are solidifying themselves as well. And the laggard of all of that was that silver, gold, copper. Are they going to participate? And obviously, I've been talking about gold versus the dollar all week long, and I'm going to continue to talk about gold versus the dollar, because this is kind of like King Kong versus Godzilla right now in my worldview, because I just can't see these two continue to go up together. So I'm going to do this gold versus the dollar until they kind of come back to some semblance of reality. But you can't deny the strength in gold right now. You can't deny what is happening from a silver perspective. You can't deny, the improving conditions that is happening in platinum and palladium as well. And so
it's a great reversal chart right there.
It is. And again, I want to say these are amazing, oh my goodness, eye-popping charts where it's just like the trades just kind of stand out on themselves. Yeah. But you have an improving, we're talking about the sector itself. You have an improving condition at the bottom. The strength is solidifying itself in the sector. It was the easiest upgrade for me as well, Frankie. Last week we came in at a 25 handle. I'm looking at just a little bit of a 5-point upgrade,
Yeah.
but my confidence level is a little bit higher than that.
Yeah, I think that's fair. I think that's
Yeah.
fair. I mean, it is definitely a place that you want some eyeballs on going into your watch list next week.
And then when you're taking a look, obviously we're talking about materials and the strength that is happening in materials. Industrials doesn't have the same type of momentum that materials has. It doesn't have the broad-based support that materials has from an industry perspective. But Frankie, it's close for me. I'm not looking at an upgrade here. I thought the upgrade was last week with the breakout. I think we're playing a little bit of defense this week. So I like stabilization from a ranking perspective, Frankie. But I'm going to tell you right now, this is an area of the market where I felt there was a lot of great charts setting up here. In fact, more so than other areas of the market, Frankie, I found more good swing trading charts in industrials this week than I found in communications, than I found in technology, than I found in discretionary. In the aggressive sectors of the market, I have about 8 stocks I want to talk to the team about from a scouting report perspective.
Okay.
In this one sector alone, I have 8 stocks I want to talk to the team about
Nice.
regarding potential swing trades. And so what's your read? And I'm going to rapid fire a couple of those charts for you right now. But what's your read from a sector perspective, from a technical read?
Yeah, I mean, you are seeing a lot of good setups, and I love the fact that we gapped on, we pushed through that resistance. We played defense all week long, didn't get the follow through. That's why it's going to naturally be below, the materials, sector, right? We didn't get that follow through, but that can come in a hurry if we take out that high there. That would be the upgrade point, right? So it could be one of those that gets upgraded mentally, at least very early in the week. But yeah, I think you're spot on there.
And I'm gonna save 2 of my favorite in industrial for when we do Frank's charts later.
Ooh, okay, all right.
But let me just give you a couple. Okay, just a couple. A little bit of a snapback pullback on Eaton.
That's a great setup.
Right, little snapback pullback on Eaton. Let's go with Frankie. I think I bring up Johnson Controls every week. I think you and I love Johnson Control, but JCI on the breakout against multiple time frame might be a little overextended for a swing trade. But when you're looking at that from a position perspective, I do think you got to like that potential breakout there.
For sure. And
then when you're looking, what's the third one? Oh, I want to give you. I want to get your take on this one, Frankie. Kansas City Southern, I think everybody, how do you win Monopoly, Frankie? You control the railroads. That's what you do. What do you think about this potential trade when you're looking at consolidation over the last couple weeks, really hugging that 9 EMA, right? So I'm looking at that breakout channel of about 313, looking at this on a weekly chart. You see that kind of all-time resistance level over here. What do you think about a breakout potential on Kansas City?
Yeah, I mean, how do you not respect that, right? Hovering at resistance for 2+ weeks, that makes sense. Resistance is hard to break. Holding its own, though, nothing above us. We've had time to cook. Easy stop loss placement below the bottom of this base. Yeah, this is definitely a legitimate breakout candidate.
Yeah, and I'm seeing, and again, these are just some of the charts that I was scanning earlier today. Going to talk about a couple more here in just 1 second. When you're talking about the other 2 sectors, very quickly to kind of solidify the week that was type conversation Frankie and I are having right now, you're really talking energy and finance, Frankie. And last week we talked about the potential separation that is happening in the market. I'm seeing that a little bit here from a ranking perspective. Energy, you got to love energy in general, and you got to respect what it did from September through October. What a beautiful, fantastic trading environment. But that trend has been over now for a good couple weeks now, Frankie.
Yeah, for a couple of weeks.
Couple weeks now. We can't seem to get out of this neutral sideways consolidation range in the energy space. For me, that's a downgrade. It's a downgrade. And it's not based on increasing volatility. It's just based on the amount of time that now has occurred in the neutrality from a short-term perspective that I think you do have to respect. And so for me, it starts again. The party starts again with the breakout. But once again, I've said all week long, I don't care what happens between 80 and 85 on crude. And I'll say that same thing in this same type of consolidation in energy.
Yeah, 100%. I mean, we are sideways. However, at this point in time, we've had enough data, whether you felt that way last week or Tuesday or when it came around to it. I mean, we basically are at the same price today that we were on October 12th,
3 weeks
right?
ago.
And so, we've not done anything wrong,
Yeah.
just not done anything
No,
right.
it's not bad.
It's basically the opposite of that XLC chart, right? The communications, we're just sideways at the top. We need to get that break for that next signal, right?
I
So this is
agree.
a great spot for cash flowing, sure. And that's obviously something that I think all of the team is interested in doing within this space. But you're right, for me at least, the next, okay, let's roll to the directional side as it is right now, has got to be that breakout, right?
It's
It's
got to
got
be
to
the
be
break.
breaking back above that 59 and change or whatever exactly that number is.
I agree. And then lastly, in the cyclical areas of the market, of finance, and Frankie, not a lot more to say on finance that I already said on energy. Kind of have the same viewpoint. A little bit of a downward drift from an intraday
Mm-hmm.
resistance level, however, as well. You see that downward drift. Support coming in rock solid at 39.80. I just think you got the same philosophy here on finance that you have on the energy space. Really good September, really good October, but now you're coming into a different type of November, and we just can't seem to find our momentum here in this space. It does look like a downgrade for me on finance. What about you?
Yeah, I mean, it's a little bit of a different looking chart, but kind of the same idea as the energy, right?
Yeah,
The chart looks a little different. And the signal I think could happen a little faster for me on finance, because
it's the intraday consolidation.
it's that
Yeah,
interday
it's right there,
consolidation.
40,
It's
40, 20.
yeah, that take out that downward trend line there. So I could see it happening faster,
Me too.
than energy, but at the same time, it's just a little bit of a different pattern. The idea is the exact same, right?
Yeah.
Until we get that momentum, whatever it is we need from a momentum perspective, I think you have to pull this back. And again, then you compare it, when we think about where we were last week, because basically last week it was upgrade in materials and industrials, right?
Yeah.
And even more
Downgrades in
separate and
finance
downgrades over
and
here.
energy.
And now even more separation will occur until we get that momentum back in these spaces, which could happen very quickly, right? Overall, their trends still are very much intact.
Mm-hmm.
So it's not like we're downgrading you to
Well,
territory, right?
no,
We're
no, no,
just,
no,
you got
no.
to respect what's happening in the
It's a
price action.
downgrade based on slowing momentum, and again, got to respect support holding, but you also got to break something here,
Yep.
finance,
Yep.
right? You got to break something, and once again, upward movement in price over time, but the longer it consolidates, those pictures do start changing,
Mm-hmm.
and the momentum starts changing as well. That's what we're seeing occur in energy as well as finance. Let's talk very quickly the defensive areas of the market, Frankie. When you're looking at consumer staples, a potential breakout against the all-time high, you've had a little bit of consolidation, Frankie, on the right side. That certainly gives us a little bit more confidence in that breakout. But is this one of those spaces? It's like, yeah, I like what I'm seeing, but break first. Or is this like, I really like what we're seeing here? What's your thoughts?
You've got to break first.
Yeah,
You got to get
that's me
that,
too. That's me too.
and you're trying, right? And it's been a good effort, and I like its chances to ultimately break through. But until it hasn't, right? And you've seen, Procter and Gamble, one of the biggest names in that space, very similar looking chart, very similar struggle at resistance all week long. It's hard to break resistance. Sometimes it doesn't feel that way because sometimes stocks are just screaming up and saying, "Oh, what's this whole resistance nonsense?" But it's tough, right? It's tough, and so that's the bullish signal, right? Whether or not
Mm-hmm.
that's how you're setting up a trade, or even if you are, is inconsequential to the fact of the breaking of that resistance is the bullish signal. And where we go from there, that will come down to you versus me versus whoever is thinking about the trade. So yeah, you're waiting for the break. I think itself. You do like what you're seeing there for sure. I do think there's some, I still think it's the grocery stores that you like. I,
Those grocery stores have been amazing. But
it
what
just
about, and I'm also thinking Costco, Target,
Yeah,
Constellation Brands is showing
Costco's
some,
flag was really
right?
nice, getting great follow through. Procter and Gamble looking really nice. So there are some decent looking charts in there. It's cleaned up quite a bit over the last month or so. I mean,
Mm-hmm.
it's staples, and so while some of the names are pretty trader friendly, like Costco, right? That's a pretty trader friendly stock. There's also a lot of Coca-Cola that's a great investor stock in my mind, but trader stock, there's just usually not that momentum and that movement.
There's a reason I said Costco and Target, right? There's just not a lot of great trading names there. Better dividends, cash flow, value type arguments and whatnot. Let's move to the healthcare space here, Frankie. Healthcare last week come in at that 30 handle. Looking at a little bit of stabilization, but no real improvements or deterioration against the trend or pattern here. I'm looking at a very similar environment. What about you?
It's the exact same as it was last week, right? That
Yeah.
low from the 5th is still the support. As long as that holds, I think we're in good shape. That high from the 3rd is still the resistance level that we need to respect. We've danced. There weren't a lot of good trade setups, I did feel, in this space.
No,
And part of
I
that was
had a
just due to where
couple I
they,
wanted to talk about.
yeah, I think I
For
had one or
example, I'll,
two.
I'll give you an example. Okay, I'll give you an example. And Frankie, nothing that was like, oh, you got it. You got to pound the table here, right?
Right.
Veritex, for example. Veritex, looking at a little bit of reversal analysis, retracement coming back into the old breakout channel, has yet to confirm, right? Absolutely needs confirmation, has yet to confirm, but I like the zone it's in.
That's a
But
great play,
Frankie,
yeah.
it's not exactly one of those ones where it's like, oh man, the heavens and the earth and the stars are all aligning here, and everybody and their dog's gonna. I'll go get my dog Rosie, and Rosie won't bark. So it's not one that's everybody's going to agree with, right? It's not a standout. You just kind of like the zone. Same conversation on DXCM here, right? You got to like the breakout potential, but you only like it with a breakout scenario. And so you're looking at an environment where I feel like, yeah, you have confidence in it, but you got to see a little bit of upward movement here, in my opinion.
Yeah, I think you need at least a little bit. Even if today's candle were to work its way
If it can
back
turn
and
green, I
close at
might
the
have a different
high,
opinion. Yeah.
and close above those weekly highs, I still don't think it'd be enough to upgrade it unless it was like a huge candle, which I'd complain about because then it would really mess up any, entries,
Yeah.
right? But I do think it's a place you're very open to. But I do feel like because we're kind of stuck in this little in between, we're almost in the middle of our swing support, swing resistance, which is always a rough place to set up a trade, right?
Yeah.
Because you're a little further away from your, ideal stop loss placement, don't have great risk to reward because you do have to respect that swing high. So I hate the middle, who don't like the middle.
Yeah, you want to see it work the edges as a trader. There's no doubt about that. And the last two spaces in the defensive areas of the market, real estate and utilities, we'll do this one very quickly. Frank, it's utilities. It's boring. There's not a lot to say here on utility space.
Yeah, it's the same old boring utilities. I look forward, it was about a year ago now, right, when they went into momentum mode. I look forward to the next time that
There's
happens.
been a couple moments in the last year where they decided to act like tech stocks. It didn't last. Everybody woke up one day and was like, wait a second.
Well, this is a utility stock after all.
Duke Energy. Okay, we're good. Real estate, again, very similar to what we've been talking about in finance and energy. You got to like the previous momentum. That momentum has seemed to stall a little bit. I do like a couple of trades here potentially, though, with a breakout against the sector, Frankie. Just want to get your quick take on a couple potential breakouts here.
Okay,
PLD, nice little breakout against 150. What are your thoughts?
I learned a long time ago that if you get a good trade on PLD, that's the best REIT to trade in my mind. So I'm always open.
I agree. What about another REIT, AVB here, looking at a potential breakout on AVB clean little chart as well?
Yeah.
Do you like that breakout? Looking at this one a little off the radar here, Frankie, UDR here. But looking at a multiple time breakout on that one, daily chart breakout against 56 and change. You look at the weekly chart, look at that consolidation, tight consolidation, looking at a breakout there as well. So you do have some interesting opportunities in this space with the breakout. But again, I'm looking at the space saying, you like the previous momentum. We want to see that momentum again. That starts with a breakout. Frankie, we're going to shift a little bit. Want to get your quick read in crude oil from a technical perspective. Agree or disagree? We've been talking about 80 to 85 all week long, and I have said all week long, I don't care what happens between 80 and 85. Agree or disagree?
You know me, I 100% agree. I 100% agree. Once the potential momentum shifts on crude, so does my attitude towards it. I'm a big believer that when that thing's running above the 9, you look for ways to take advantage. When that goes, you let it go sideways as long as it wants to do. Because I mean, it could break out as early as next week, but if we're still sideways come Christmas time, no one's going to be surprised because that's kind of what crude does, right? Runs and consolidates, whichever way it happens to be running at the time. So I'm with you 100%. Wake me up when we break to the upside.
Wake me up on a break. What about gold, Frankie? Gold versus the dollar. I'm going to do it all week long. It's going to be like a theme for me. This has to come back down to some degree of normalcy for me. What's your read, though, from a pure, take out the macro concern that I have, Frankie, because that's a lot of my concern.
Sure, yeah.
Let's take that out, okay? And let's just focus purely on technicals. Overextended in the short term, but we're talking about momentum for the first time in quite some time for gold. What's your technical read? Pure technicals.
Technically, I don't see there's any reason we don't get into that 19 to 1915, 1920 range.
Kind of test the highs there?
Kind of test those highs from back in June. Technically, I don't think there's any reason we don't do it. The issue, if you want to call it that, would be the management side of the trade, right? Because we are a little bit overextended. That would lead me to, hey, if we dip back into that 9 or get that little couple days consolidation, let's look at that as the next leg to the upside. Technically, I think you have to respect it. We've taken out resistance. We are seeing separation in the shorter term moving averages. We're seeing momentum with our own eyes. We know that there's not any resistance until we get into the 19 range, however you want to classify that. I think some people would just call it 19 even because of the round number. Some people would go to the actual high point and say it's 19 and change, right? But into that zone, I think that's where we think this is going technically. I think the problem is we are a little overextended. And so I think it's probably easier to see if we get a little dip, right? We don't want a big dip because then we're losing all that momentum that we just talked about, right?
You want to see a flag or a high base.
We want a little dip, a little bit of selling into a flag or a couple day high base pattern and go from there. Because if we break that 9, well, then maybe we're just back into being boring gold again. It's been an impressive move. There is no two ways about that. And technically, I don't see why we aren't pushing into the 1900 range.
I agree with that. Technically, you got to like the breakout of 1835 to 1840. You got to like the momentum that you are building here. A little bit overextended, just slightly overextended, though, the short term. I certainly do agree that 19 by 1915 would be that next logical target here, Frankie. Silver has improved along with gold. We're testing up against that 200-day moving average for the first time in quite some time here. You're also coming through a head and shoulders reversal pattern on silver. That's something to keep an eye on as we navigate the bullish trend that is now starting to develop post a reversal in silver. We talked a little bit about the other industrial metals. Palladium here showing a little bit of reversal analysis. You also have platinum as well, very similar to silver, kissing up against that 200-day moving average. And then last but certainly not least, copper. We saw FCX break out earlier in the halftime report. Copper doing its best to trying to confirm above that 4-5 handle as well. In general, Frankie, the industrial metals, yes or no right now?
Yes, absolutely. And I really like the way that silver chart's lining up because we're developing the potentially at least that rare 209 pinch, right? Where if we get a few more days in this range between these averages,
little consolidation here
is going to catch us up, even a little dip. I don't really care as long as the selling is above the 9. I don't care where or quite honestly how it happens, but I want to see that pinch develop, push us through the upside. I think that could be an interesting buying opportunity if we can get just a couple days dancing between those moving averages.
I certainly agree with that. I like the improving condition of silver. I like it even more than gold, quite frankly.
I would agree
from a technical perspective.
I would feel more comfortable trading it, because I'm kind of like a lot of us at tackle trading.
I like the theme on industrials, and I like the theme on basic materials. I like that a lot easier than the David versus Goliath, dollar versus gold analysis right now.
I blame you for my stance on that.
I probably am responsible for it a little bit.
You probably are.
I'll allow it.
I'll take it. Yeah. It's probably saved me a couple dollars throughout the years. I'll probably live with missing out a few times. I'm all
Well,
right. I think it's
most
a
of my
good trade in
dollar
the end.
versus gold analysis has led to pro gold in general. I will
Yes,
say that.
yes. If I'm giving you blame, I have to give you credit too, and I think I'm
Yes,
probably ahead on
yes,
that.
I would say, but also paranoid conversations on David versus Goliath, gold versus dollar type analysis. You gotta like that stuff.
You do,
All
of
right,
course.
let's talk a little bit, Frankie, about some news of the day here. The only really news of the day, Frankie, I want to talk about is the consumer sentiment report that did come out today. Consumer sentiment was the lowest reading we've seen since 2011. And yes, Frankie, that does include the pandemic that shut down the economy and changed our way of life. And consumers today are like, yeah, but I didn't see a 6% increase in inflation. And so consumers today came out with a 66.8 handle on the consumer sentiment report. The expectation was around 72.5, so it was even worse than the expectation. But a couple data points here, Frankie, that did stand out to me. We've been talking about inflation. We've been talking about it nonstop. Tackle Trading's been talking about inflation longer than anybody knew inflation was to be talked about. That's how long we've been talking about the concern with inflation. We're seeing it play out, though, in people's everyday life.
Yep.
Now, 25% of people that were surveyed in the consumer sentiment report this month said that inflation is having an impact on their everyday life. These things are extremely concerning. And quite frankly, I'm going to say it again. I've said it. I feel like I've said it enough till I'm blue in the face. The Fed is completely asleep at the wheel
Yeah.
on the real impact that inflation and their disastrous, let me say it again, the disastrous monetary policy that they are currently laying out right now is having on people's everyday lives. If Jay Powell truly does represent the American people, as he tries to say every time he gets in front of those press conferences, you're going to start understanding that your failed monetary policy is absolutely having an impact on real Americans' everyday life. And they're saying it to you. They're screaming it to you. What are you going to do about it is the question. But as of right now, we're looking at the exact same monetary environment. We're looking at the exact same backdrop of stimulus and the things that do stop the bleeding from an inflationary perspective. The Fed doesn't want to actually talk about because it has nothing to do with quantitative easing. Has nothing to do with that. Has everything to do with raising interest rates. Has
Yep.
everything to do with raising interest rates. That's what stops inflation. You cut the supply out of the equation. Will the Fed stand up and act? Because inflation, yeah, if the market goes down 10% and pukes up a little bit of the gain, we traders will be all right.
Yeah.
We'll buy that dip.
Yep.
It'll happen. Okay. But you know what? That real impact on American lives is something that you have to fix. And you cannot be asleep at the wheel or you stare at a lost decade of stagflation like the 1970s. And so just wanted to point that out. I didn't want to get on a soapbox at all, but I'm really getting sick and tired of how asleep at the wheel the Fed is.
Yeah, I wish they'd listen to your soapboxes. They could probably
They
maybe
don't.
that would no, they clearly don't. And if they do, well, they probably are saying mean things. Matt Justice doesn't.
He doesn't know. He needs to live in our glass house. I get it. I get it. I get it, Jay. Okay. Anyways, that was really the only
There was
economic news. There was also the JOLTS report that came out of the labor market, but that's labor market news not really having an impact here today. Did you have something to say, Frank?
yeah, I was going to say that Johnson and Johnson came out and they're actually going to split into two different companies. I don't
Yes.
exactly know how they're breaking that up, but that was certainly big. Not really necessarily market right now news.
Yeah, there was two stocks in the news that I did want to bring up. One was Johnson and Johnson. What they are doing, Frankie, is they are separating their consumer health business into its own publicly traded company.
Okay.
And so basically they're taking one of their segments out of their business and they're transitioning it to basically have it live on its own. That's what Johnson and Johnson is doing. So a little bit of positive momentum, but obviously intraday wise, little profit taking. I'd like to see that chart get cleared up a heck of a lot more. And then the last one here, I wanted to get your take on a little bit of agree to or disagree moment here, Frankie. Nvidia, which has been on absolute fire, has earnings coming up really soon. So I'm not talking trades here, but Wedbush did downgrade Nvidia despite this massive meteoric rise in price over the course of 200 to 300 and change. This is obviously a company that split, but you've had a massive rise over the last month. Wedbush says, oh, wait, whoa, we don't believe in this. Agree or disagree with the downgrade from outperform to neutral here, Frankie?
Disagree. I almost always disagree with the upgrade downgrades. They almost never seem sense to me. That's brave going into earnings. Yeah, hey, if Nvidia had a bad report, gap down,
downgrade
sure,
there.
Let's talk a downgrade there. But yeah, no, I don't agree with that at all.
That's like saying I'm going to pick the top.
Yeah, I'm not.
I don't like people's track records of trying to pick the top.
None of us are very good at it. It's hard.
None of us are.
It's hard.
Like literally, no market participant is good at picking the top.
Not me.
Same
not
thing
you.
with picking the
personal.
bottom. You can see the analysis, but right now you're talking about one of the best companies in this space is what you're talking about in Nvidia. I disagree with it as well. Just wanted to get your take on that as well, Frankie. Let's not delay it any longer though. Here, Frank's charts. Love Frank's charts. Frank, you do a Frank's Charts little tackle short every Thursday on Twitter. First and foremost, speak about the Tackle Twitter account, why people should follow it, and then why they should watch your Frank's Chart you post every Thursday.
Yeah, well, it's always fun to share charts, right? There's no bad way to find a trade, and I certainly don't expect everybody's going to like every chart that I do. But throughout the week, if I or if Matt or if Jonathan or one of our team members brings something up that's intriguing, at least to my eyes, I'll usually snap a picture of it, throw it up on Twitter, and just to get it out there on somebody's radar. And if you like it, it's a good addition to your watch list. Great. Frank coming to you with. If not, no big deal, no harm, no foul. So it's just another way to be able to share trade ideas throughout the week as new charts develop. I'm a chart nerd. Everyone knows that, right? And so if I run into something, I do want to share it with somebody, and it might as well be Twitter. So I certainly invite you to come over and join us. Beyond that, it's a great way to be able to kind of, be up to date what's going on here at Tackle Trading, right? And as far as the little video that I cut on Thursday, that's fun. I enjoy doing it. It's just a little mini version of what we do here, right? With just one. The challenge is I got to keep it under 2 minutes, which is hard for anybody.
It's so hard.
Anybody who's ever talked to me about trading knows that 2 minutes is impossible almost, but I'm getting better. I've not had to cut a second video for a couple of weeks in a row now. So making progress on that front, but I always like to be able to share ideas with the team. And like I said, if it's an idea you like, great. And if it's not, that's okay too.
I love the video. I love the 2 minutes. It's tight, concise, gets right to the point. Love the analysis as well. And Frankie, you got a great technical read. So I always like to get your technical read on absolutely everything. And let's do another edition of Frank's Charts. Well, Coach Frank we're going to play a little bit of you won, me one. You won, me one, right?
All right.
So Frank, you're going to try to get me, and then I'm going to try to get you.
Okay, so the nature of the rule is when I give you my trade, I'm going to give you my spiel, right? And then you're going to either pass or join.
Yeah, we'll do a little.
Okay. Make sure I got it.
Because you and I, we do this in the scouting report meeting as well. We'll do a little mini scouting report meeting where either I'll veto or not.
Okay, all right.
And either you will veto or not.
Well, listen, I'm going to start off.
I don't think you and I are going to veto each
other. Probably
not
too many disagreements. Well, I'm going to start off with a guarantee that you're not going to veto. And this is a breakout candidate from last week that I brought up. It was actually the chart I did last week in Frank's Charts on Twitter, and that's GPK. Still fighting the good fight at resistance, has held up all week long. Nothing in my mind has changed in that chart. I still like a 22 target for that first, or that aggressive swing target on the break. Obviously we need to break first, right? And probably need to get above 21. I will call it. It's a little shy of 21, as far as pinpoint, but above 21 would probably be breakout confirmation, with the 22 target as kind of that first or aggressive or short-term target, and 23 is a secondary target. Nothing crazy, same as last week. If this thing breaks, I'll be there one way or another, for better or worse. I'll be around.
Number one, it was a good breakout last week. It's a good breakout this week. And if it consolidates another week and doesn't break a support level, it's going to be a good breakout next week too. Nothing has changed from last week to this week. And so when you're looking at this, you still got to like the breakout potential because you don't get to pick when something breaks out. That's not your choice. You just get to participate in it or not.
Yep.
I like the breakout here. I like it. I liked it last week. I still like it here this week. And so it's a yes for me from a moving on perspective. Frankie, I'm going to bring so GPK. I like GPK. I'm going to bring, let's go with Rock.
Okay.
Yeah, let's go with Rock here. This is Rockwell Automation. You're looking at a bullish trend. Gap analysis post earnings. You're always looking for that secondary pattern to develop. You never get to pick the time when it does. You just got to track it. That's why it's on a watch list. I like the price response to the earnings. You consolidated. You tried to give a little bit of a high base. Ultimately, that failed, and you started filling that gap. Now you're coming into the bull zone in between that rising 20 and the 9 EMA. That's a nice little bullish retracement type scenario. Like the upward movement in price you're seeing here today, getting back up above the 9 EMA, back up above yesterday's high. And you look at this on, get rid of some of those ticks. You look at this on an intraday perspective, Frankie. And when you talk about confirmation, you can talk about it in a variety of different ways. But I look at that trend line. You blasted through that on the cash open, and you've done nothing throughout the entire day. Like that from a confirmation perspective as well. What do you have to say about Rockwell off the gap fill bullish retracement analysis?
I like what we're seeing from an entry point of view. I think stop loss placement is starting to become very clear. Getting below that yesterday's low.
I think the 20 period moving average.
Yeah,
It's
going to line up. We're going to line up very, very close. So that's going to lead to the other part of the equation because I think the entry is there. I think the stop loss location is fairly easy to identify. We obviously probably, I'm guessing T1 is going to be back up.
I think you got to target 345,
346 for the first target, which is, I think, sensible to do. Which
second target, you're going to make stuff up on second target. It's all-time high on a gap out on earnings, but I'm going to say about 360.
Yeah, you're going to need just shy of 360. 360 is, well over 2-to-1. I think 357 or so, 358 is what you would need. I don't think that that's an unreasonable ask. And I think when you're thinking about, well, are you just making stuff up? Well, if you just kind of look at just that trend line that they've been on since this reversal, that does kind of lead us up in towards that 358, 359 range. So I do think your secondary target analysis can be there as well. I think I can get on board with this.
Yes. Let me connect a couple dots here, Frankie. There you go. All right. You're next, bro.
Ooh, it's my turn. All right.
Your turn.
Right. My turn to go. All right. All right, let's go with so close. Okay, I'm going to go with a different look, not my general style of a trade because I want to play this game with you here. So I'm going to go with Ben, BEN, Franklin Resources.
Little Ben Franklin, huh?
Little Ben Franklin. Ben Franklin here, investment management company. Broke out on a big gap out on earnings, right? We had that big gap and then a huge 2-day follow through, breaking us into some new highs. I don't believe they're all-time highs. I think Ben's been higher in days gone by. Yes, they have. In fact, done that, but that might even add to the analysis because along the way, we've basically taken out that long-term weekly downward trend line through that gapping out. Got a little bit of a pullback into that rising 9, little bit of slowing momentum over the last couple of days, getting more upward movement here today. So looking at a band, you're basically saying we had the great report, we've broken some resistance, we've broken a long-term downward trend line, we're bouncing off of that 9 EMA. This will probably be a good risk to reward trade, depending again maybe on how you do your stop losses, but how I would probably do it is the actual low point here with the targeting back up into that old resistance level as that first target, which would be fairly close to 2-to-1, using kind of above today's high, below the low of this week.
That's why you gotta love deeper retracements.
And I like that it's coming out of a lot of reversal-y stuff, right? It's well into the reversal. It's not like this is the second or third swing. on the reversal, but risk to reward could be there, and they don't really have a lot of old resistance beyond that recent swing high, which I think makes for a very sensible place to go. Not to say that they'd be my target, but really there's not really anything that just jumps out to me as I look at their longer term chart until we get to like 42, 43, which is again probably not a swing trader's target, but it does kind of illustrate there's room beyond that high.
I like Rockwell, the gap out analysis, secondary post earnings bullish retracement. I like Ben more. You had increasing momentum versus contracting momentum. You had increasing momentum on the gap out following a positive response to earnings. You clearly established a higher level of resistance with momentum attached to it. You then saw a profit taking session, which was very, very consistent from a technical perspective. That actually was a decrease in volatility, not an increase in volatility. When you look at this on a 30-minute chart, Frankie, I love the consistency of this pullback. I love the consistency of that pullback, and I love support coming in at 35. Clearly support coming in at 35, which is so important because your stop loss has to go under 35, right? Yeah. So you're looking at that. But then when it comes to the trigger, I think the trigger stands out too. And so the trigger to me, when you're looking at this, 36 just stands out to me. You see it over here, 36, 36, 36, 36, 36. It just kind of stands out to me. And yeah, I see a tighter 35.75 trigger. You could go above intraday today. But I just think if you clear out of 36, given the depth of the retracement, clearing out of 36 gets you outside that chop here. You got a clear upward movement in price at that point. Yeah, I like it. I like it. I like it from a deeper retracement. Should I stay on the deeper retracement for my pick though?
No, we've had two deeper retracements in a row. Give me a breakout. Come on now.
Okay, can I just put something on radars then?
Yes, of course you can.
Okay, Nike's deeper pullback.
I thought you were going to like that one.
Nike's deeper pullback has to be looked at, in my opinion. But I will say I like Ben better. If I had to rank the deeper pullbacks we've talked about, I would say Ben 1, Nike 2, Rockwell 3.
I would say Ben 1, Rockwell 2, Nike 3. But the 2 and 3 would be very, very
very close.
I would agree. Yeah, it's just the consistency of Ben, right? That it's just been a little. It really stands out.
The consistency intraday analysis on Ben is really something to behold, quite frankly. So if you don't want that, do you want a right shoulder breakout?
Yes, please.
Do you want a right shoulder breakout that looks awesome?
I absolutely do.
Well, I'm going to bring you Carrier Global here today then, Frankie, and Frank's charts. I like a couple things here, Frankie. I like the sideways chop here. I like it. But what I like about it is you got an increasing support level that coincides with the previous support level. You're building on your momentum. You're looking at that right shoulder right there at about 54.80, 55. You clear out of 55 on a no-sell breakout here, Frankie. I like Carrier Global on a right shoulder breakout.
I absolutely agree with you. They were definitely on my radar as well. Wouldn't have minded them taking one day off, but you can't always get what you want.
You don't get to pick the breakout.
You don't get to pick the when of it all. Yeah. What I like about this, beyond kind of what you said, is we are pushing into these all-time highs, right? That's just around $59. So I actually think with what we're seeing in this nice breakout on that head and shoulders pattern, I really think this makes some sense for a scaling in type of philosophy in a trade.
Whether front run in front of that,
a little front run on the breakouts. I think we can get over 1-to-1, even using today's high and basically the low from yesterday, and although that clump of moving averages there for stop loss still gives us 1-to-1. Lets us add to that position on the break itself. It also could make sense from an options point of view to be a place where you do kind of the convert, start with a long call and look to sell and turn into a bull call at that.
You buy that 57.5, and I'd have to map that out.
You'd have to map it out, yeah.
You buy the 57.5 call, basically with the anticipation that once it gets to 57.5, you write the 60 call against it.
Right, exactly.
Is basically what you're thinking. And Carrier Global is not exactly a great option.
Yeah, they're not super great with options. Yeah.
And so, but you can get some liquidity. You could go out of the money, buy that 57 and a half. Again, it's not the best, but you could do it. Go out there, buy that 57 and a half. Once it gets to 57 and a half, that delta becomes 50 to 55. Then you sell that 60 to bring in some cash flow, and the cash flow would be right about $180 at that point. So that's a way you could do it. But again,
Yeah, liquidity. You don't want to mess with the liquidity, right?
It's not, again, I don't want to say it's not doable. You can do it, and you certainly have the volume to support it. Like, you absolutely can do it. It's just a 15-point spread on a $1.80 contract. You want that a little tighter.
You do want it a little. You do want a little tighter. I have a philosophy that when in doubt, don't play the options.
And again, I still think it can be done here. Like it would not be a veto for me from an option perspective. You want it tighter, but a 15-point spread on a $1.80 contract, it's max level. But again, if you have a couple thousand contracts there, you got a couple hundred traded on a daily basis, you're fine on liquidity. It's just the bid-ask spread needs to tighten up a little bit. That's all.
Yeah.
And I might be nickeling and diming that a little bit, but yeah, I do like the right shoulder breakout. Do like the front running, and yeah, I could be sold on starting a bull call spread without a money call option, but I'd like to have that conversation a little bit more to kind of work it out.
Sure. Yeah.
Car.
Absolutely.
So we're 4 for 4 so
we're
far.
4 for 4. We're 4 for 4.
I think we're going to hit 100% because it's you and me. But
you never know until you try.
Those vetoes do happen, Frankie, and I don't know what you're bringing to the table here. I'd like to first do. What do you got for me now?
Well, I know you're not going to veto this one because you already brought it up in passing earlier today.
Veto.
Eaton Corporation.
I'm not vetoing Eaton.
You can't veto Eaton after bringing it up and like what you saw. This is a good old-fashioned Cody special snapback, right?
Yeah.
Broke out, got through the earnings season as well. So we broke out with that earnings season behind us. I don't know what their earnings were, but clearly they weren't terrible to break through resistance. Quick snapback, profit-taking session back into that old resistance level. Nice bounce back candle here today. Need a little upward movement, probably above today's high or yesterday's. It looks like today is going to technically take out yesterday's high. I like this as a secondary chance to get in on the breakout because, hey, you know me, Matt. That's not the type of breakout that I'm taking on November 2nd, right? I'm complaining to you that it's ran too hot. Hopefully we get a couple days of consolidation.
You can slow down a little bit.
I mean, that's just not a me type of an entry, but it absolutely was a breakout, right? And so this has given folks like me who just had to pass on that because of their reasons, whether they were, crazy or not. We're getting that second opportunity to come in on the breakout. We've got the confirmation. We're getting a couple days of candles. If we get a little upward movement, I think that would give us an idea of where we want our stop loss to be. I like these guys. I like a 180 target as a secondary target here on Eaton Vance, and that's about where I'd be kind of looking at. Probably first target, ideally, it would be that recent swing high at 1-to-1, but if it's not, that wouldn't be a deal breaker.
It's not a deal breaker for me either.
It's a preference.
It's a shallow retracement against a breakout that was overextended. I think context matters here.
Yes, it's a preference. All things being equal, the first thing I want to do is target the first challenge, right? I don't think that's a big deal, but it is the first challenge, regardless of what I think, right?
Mm-hmm.
But 1-to-1 won't work there. So my go-to technique beyond that is adding an ATR to that high. I think that's a fair expectation. I'm not exactly sure where that would put me. That would put me
ATR, that
177
that would put
or so.
You about 178.
178.
Mm-hmm.
So, and I'd feel comfortable with that. I'd also feel comfortable because 178 is within that 180.
I'm comfortable with 1-to-1.
I'm looking at 180, right? Yeah. And how I'm target oneing, I do think it's important that we target one because you don't want to be second target or bust, right? But how we're doing that, as long as it's over 1-to-1 and it's a comfortable thing, I am with you. 180 is really what I think we're working towards, Yarny.
Yeah, I agree. I think 180 kind of stands out to me, especially on this chart. This chart has a tendency to run $10-12 before it gets a little bit, overcooked a little bit. I like to play here. I like to play in industrials is an area of the market that is becoming in favor. And certainly running a little bit more aggressively than some of the other cyclical areas of the market, and certainly does look like industrials will be getting an upgrade. Frank, you got one more. I got two more.
Okay. All right.
I got one that's a that I think I'm going to get you, and I got one that I know I'm going to get you.
Well, give me the one you know so we can save the suspense.
Okay. All right. Then I'm going to give the one that I know I'm going to get you, and that is, did anybody say, hey, Matt? Applied Materials. Now, it does have earnings coming up here, Frankie, okay? But I want to get it on radar, okay? I want to get it on radar because when Applied Materials runs, Applied Materials can be one of the most consistent stocks in the entire marketplace. And I love the 8-9 months of consolidation here.
Oh, it's fantastic.
I love
it's
the
beautiful.
8-9 months of consolidation. We got to get through earnings, Frankie.
Got a week to get through.
Got to get through earnings.
Hopefully, it's a boring earnings.
But it is absolutely something that should be on people's radars. This
100.
This is a fundamental darling in the semiconductor space, and it's one of those stocks like for example, Frank, I feel like there was a small crowd that talked about Taiwan Semiconductor for years and years and years and years. Yeah. Everybody else would talk about AMD, Intel, yep. Right? All Micron, the high flyers, and Nvidia. I think it was a small crowd that just really embraced what Taiwan Semiconductor was, even before you could do all the liquid options. We were talking about Taiwan Semiconductor before people were selling covered calls on it.
Before it was comfortable trading options.
Same thing with Applied Materials. Applied Materials has been a Tackle 25 stock for 6 consecutive years. It's up there with the Apples and the Microsofts of the world regarding the consistency for us with the Tackle 25. It's breaking out over the course of the last week and a half. It's got earnings coming up. I'm not talking short-term trading here, but I am talking about when this company breaks out of weekly channels, it is time to ride the train a little bit. I like position style analysis on Applied Materials. And again, for a lot of investors and traders, they're just going to navigate earnings with either one, collaring the trade, maybe buying a protected put option, especially against the rapid price action we've seen in Applied Materials. But I like position style analysis, long-term. Applied Materials is my favorite in the space. What are your thoughts?
It's beautiful. Its earnings are infuriating because, we talked about
because
it last
if it
week
wasn't,
too,
you'd be like, I'm trading this tomorrow.
Right now, with this range, I mean, we were in that consolidation range forever, which leads me to believe our next move out of that range is that range, which is about 180. So while, like you said, the trade, we don't trade through earnings, right? Sometimes
not swing trade.
Sometimes after the fact, we wish we would have, but we don't do it. Nonetheless,
we all want to cherry pick against
180 window. As long as we hold this breakout channel, that 180 window is, in my opinion, still in play. And so we'll just have to see what we look like post earnings. I agree. I want it on the radar for sure.
Well,
and I'm open to trades, really quickly after that earnings, potentially at least.
And the reason I bring it up, Frankie, is because I don't have an opinion that Applied Materials is going to drive 20% on earnings. You never know, but this is one of those companies that will just move very similar. You wouldn't, if you didn't know when the earnings was on the chart, you couldn't point it out on the chart.
Correct.
Okay. That it's one of those companies. Because sometimes, like we have these circles here. Yeah, we know when earnings is, right? But a lot of times you can just point on the chart. Oh yeah, that was earnings, that was earnings, that was earnings, right? Because you know what it looks like. This isn't one of those companies. And so I wanted to bring it up because again, we have earnings coming up on it fairly tight. But you could see some pretty quick developments on Applied Materials. And absolutely, I will be covering Applied Materials earnings because
I'll actually want to hear Applied Materials earnings. So
unlike Activision, which is not going to be on the next edition of the Tackle 25, Applied Materials will be.
I think that's probably fair on both counts. I think that's probably
agree. So I just wanted to bring it to the radar, Frankie.
All right.
Now,
all right. Yeah, it's a great look.
I got a wild card for my last one. I don't know if I think I'm going to get you, Frankie, but I know how you might be like, did we miss?
All right. Well, I'm looking forward to that. What I'm going to try to get you with is with DuPont DD. I still want to call them Dow DuPont from days on and gone by, but it is just DuPont now. I like what we're seeing here on these guys post earnings. We were struggling, right? We started to see some reversal analysis come into play ahead of earnings. Then we had that big big response. I don't know how great their earnings were, if they were great enough to justify that movement, but regardless, that movement is exactly what occurred. We've now spent the better part of 2 weeks creating a very, very consistent intraday top, and we've been inching a little bit up on those lows along the way as well. I like a continuation of this move if we can break through that resistance back into those old highs. Now, we do have that double top at around $86 that I do think we have to say that's the target. That's what we're looking for. As far
Yeah.
as this move is concerned, I don't
Yeah,
think,
but that's fine. I mean,
but that's
there's
fine.
nothing.
Yeah, these guys
Yeah,
aren't.
that's
I
fine.
mean, that's these guys are
I
perfectly
would say
within
you
range.
got exactly what you needed out of DuPont on that move.
Don't think you could ask for more if you
Mm-mm.
were looking to trade it post earnings. You got to love the cleanliness of that intraday chart. It gives us a very easy idea of how we want to get in. It's going to give us a couple of options from
Oh,
a stop
the
point of
market's
view.
telling you where it wants to trigger. There's no
It's
doubt.
telling you where you want to
8120.
go. You got a couple of options with stop loss, the bottom of the base, today's low, yesterday's low, the day before that. So you're going to have some options
It
depending on how you like to manage your stop too. So I really
yeah.
like the way this is shaped up.
Frankie, it obviously passes all the tests for me. I mean, you're talking about a good momentum following a positive response to earnings. You're looking at secondary pattern analysis with a high base where the 9 EMA is trying its best to catch up to the current momentum. And even after a week and a half, this will tell you about the current momentum. After a week and a half of consolidation, the 9 EMA still hasn't touched it. That's the current momentum, right? And so you got to like the tight nature of that resistance channel. And so yeah, it's certainly a pass. The only question I would have is it's there's going to be a lot in this space to discuss,
There are.
right? And so it's just a matter of, do you like this one or XYZ one more?
Yep.
But again, you're talking about multiple different industries in this space as well. So looking forward to that conversation. Look forward to what stocks in the material space do make that final cut for the stock and the options report. I kind of have a feeling that old DD is going to make that final cut, though, Frankie.
They'll be
Now,
on that. They'll be
I
fighting till the
like it.
end.
I like it. I like the momentum. I like the cleanliness of the trigger. Yeah, it's a yes for me. And I do think 85 to 86. I don't think you can ask for more out of DuPont. Like
No,
that's not what this stock is.
yeah, that's a different and also a really good trade, right? But that's the next one, right? That would be a very nice breakout on that weekly time frame,
Oh yeah, in a
because
month from
you
now, I
know.
can't wait to analyze
So
it.
here's what we hope. Here's what I hope. We get a nice clean entry. Don't get stopped out. Work our way to 85, 86. Naturally take some
Just turn it
profits.
into a turtle trade
Hang
position
around
trade.
there. Nah, close out. I'm not going to
Okay,
bet on that breakout
I'm with you on
happening.
that. Close out.
Let that development. If it pulls back, then maybe we can talk about a front running scenario
I like it.
towards that. If it consolidates, we'll just think about it as a breakout. But yeah, I think when you get to that resistance, I personally, for better or worse, I'm of the school of thought that you close, and if it just breaks immediately, you just say, well, good for the folks who
Yeah,
stuck around.
you ran.
They need it, because a lot of times they're not getting out of resistance, and that's not what happens, right?
Listen,
And then look for
I'm
the
with you,
secondary
Frankie.
trade.
I think this one's simple. I think you drive it to 85 to 86, and you wait for that next one to develop here. Whether that's a 2 weeks from now or a month and a half from now, we
Yep.
don't know. I do like the potential break it at 81.20, and it does look like it's pretty clean up until about 85 to 86. So I do like that. Now, Frankie, I'm going to bring you a little bit of Domino's
Ooh,
Pizza,
Domino's Pizza. All right.
DPB. This is a company you do not want to sleep on when it wants to drive in bullish trends. I just want to go back and I want to show you a backdrop of something really quickly, frankly. We're gonna go back a long time here. We're gonna go back a long time, tackle trading, and we're gonna look at Domino's greatness for a very long time. Guys, what you're looking at here, and you can't even see how low this price started, but this is a company that came out as an IPO in the same time frame that really kind of Amazon, Google, those types of companies, but it
Okay.
was really Google. So you're talking 03, 04 type time frame. From that time frame on, this company has destroyed Google's price appreciation.
Yeah, it's impressive.
This is a company that when it wants to fly, it gets on a Falcon 9 and it gets into outer space type fly. It really is. Before Go to the Moon was popular,
It
I
was going to
couldn't
the moon.
imagine what the Reddit crowd would say about Domino's Pizza for the last 20 years of going
Right.
to the moon. That's what this company is. You're talking about recent momentum shifts, recent volatility shifts. It's not for the faint of heart. It's not an easy trade. You're talking about increasing volatility to the top side. Momentum over the last 2 days has been no sell days. Buy at the low, no sell at the top. Let's ride the train. Let's walk the dog a little bit. Like the momentum, targeting that 540 area, Frankie, is where I think you got to target, is that 548 area, right into that old resistance between
level.
540 and 542. Really, I don't care about that wick. That wick's nonsensical to me. That's an earnings wick. It
Right.
really solidifies itself between 540 and 543. So I'm looking at the momentum between now, riding it into there, and then look for some consolidation. Look for some consolidation. The real breakout is against the all-time high. Like the momentum, like it driving to 540. And once again, I'll say it again, when this little dog wants to run, it runs a little faster than the other ones.
Oh, it definitely is not a slow runner. I think the analysis is spot on. I think the only real question is can you map something out? It would have been nice if
you can't map out a standard step system swing trade.
No,
here.
not at all. I mean, I think if you're going to play this, I think the
it's
way you're
momentum
looking
bar
at
by
it
bar.
is it's a scaling in. The way I would look at this is basically I'll play bar by bar to that resistance, right? I will take a partial position, not a full position, kind of a front run the breakout, because I agree with you. I mean, the real great bull signal is going to be taking that all-time high, right?
It's a consolidation high base breakout against 540. That's the best trade.
Exactly. So if you can't live without getting a little piece of the action up until that range, I don't mind a scaling in philosophy, but I like scaling in for a couple reasons here. Number one, the obvious, right? We got to respect that all-time high, because the only thing I can tell you for absolute certainty is last time Domino's got there, it was the end of the road, right? It was the end.
And off a blast out 60-point movement on a rock star earnings report.
Exactly.
And it was rock solid resistance at 540, 542.
Exactly. So we got to respect it, right?
Yeah.
We got to respect it. So that kind of goes without saying. But another reason I like scaling in is it gives me the opportunity, if it were to dip back down into this trend line, I'll use the 9 EMA because it's going to be a fairly good proxy for that short-term trend line. If we did get a little bit of a dip back into that 9 EMA, that would potentially give me an opportunity to scale in on the rest of my scale in portion of the trade, right? So it's going to give me the flexibility to potentially play. If that momentum goes away, I'm going away with Domino's, whatever I'm doing or not.
Well, Domino's, you're right. You ride the 9.
You ride the 9.
You ride the 9 on Domino's,
which means your stop loss, and that's the problem with the regular swing trade analysis here. You're going to have a terrible risk to reward ratio if you're going below the 9 EMA initially, where we are right now, right? I think probably the best way to look at it is this, and this is how I will look at Domino's. Cheer for the people who are involved with it. Hopefully it just blasts up to that resistance level and consolidates and look for the breakout. If, however, it dips down on us and we do pull back into that rising 9 EMA, if it's a big, huge red candle, probably can discount this. But if it's somewhat mellow, look to buy the dip and take that same philosophy. So I think this is one of those, when you do the risk to reward analysis, I like the momentum. I like its chances to work towards that resistance, but the risk to reward is just not going to be there. I'd like to put myself in a spot that if there is a dip,
that's why I didn't know if I was going to get you on it, because it's not. And
I've been kind of playing around with it and seeing what my numbers would look like as we've been having this conversation, and I wouldn't.
The best you can get is 1-to-1, in my opinion. You cannot get, if 540 is your legitimate second target, which I don't. I think it's your first target. You can get better than 1-to-1 if you put a stop loss underneath the 500 point. You can if you put a stop loss underneath the 9 EMA. You can't get there, but again, bar by bar analysis allows you to tighten up those stop losses against swing trader analysis. Yep. And so when you're looking at momentum bar by bar, I look at a couple of things. A lot of traders will look at the low prices where support hit. I don't think you can do that in bar by bar analysis. The momentum's too real. And so you can't get a stop loss underneath that pivot point at 496 or 500 in a swing trade analysis, because you're taking too much risk, right? So what I like to look at first and foremost is where was those key levels of resistance, because resistance can hypothetically be that next support level. I look at this at 510 here, Frankie. I look at that at about 509. I look at the consolidation resistance at about 507. And so I look at this level between 507 and 510 and I say, okay, if I can get it anywhere underneath 510, entry above the highest day, for example, and underneath 510, you're taking about $12, $13 risk for a potential first target of first target of the 540, 542. So you can get about, and again, it's close, but you could probably get about 18 on the first target here with about 13 on the stop loss underneath 510. My point is it can be done, is my point. It's just very aggressive.
Yeah, I think, and I think it's just a little too aggressive for me. I think the best play here is to cheer for everybody in dominoes. Hope that next Wednesday you wish you would have done that, and then get a consolidation breakout. But being open to the idea, if we do get a little bit of a dip back towards
and now
that
I can't
nine,
even
let's roll.
scoreboard when Domino's dings 540 because you're like, I was cheering you on. Like, yeah, I like
Listen,
it.
I'm
I
always
like it.
cheering for
I like it.
for other traders, even if I'm not
Hey,
involved. And I
Frankie,
hope they cheer for me too.
last thing, and then we're going to say our final thoughts here. We love Coach Tyler, right?
Yeah, of course we
Okay.
do.
Okay. I got one for you then, because we love Coach Tyler. Tap and trade? Do you guys love Coach Tyler? Everybody loves Coach Tyler. Everybody loves Coach Tyler. I got TYL, Tyler's Technologies, with a high base breakout against 550. What do you have to say?
Ooh, all right. So Tyler, I want to trade Tyler just because it's Tyler,
Exactly.
right? And so I know I'm
No
immediately
reason. No other reason.
immediately biased here on Tyler. I do
Are we
really.
bullish on Tyler? Are we bullish?
Just don't tell him. Yes,
Does it
we
have?
are.
It has momentum. It's breaking out. It's an improving condition.
It's moving very, very nicely. And so, yeah, the entry and the bullishness,
I wish this
think,
was a bearish setup right now. We could just talk about Tyler bearish.
that would be a lot of fun
I know.
to do. I think you're gonna have to stack it up risk to reward wise with the remaining, your other candidates. Because I think at this point in time, we got our breakout confirmation, candle today, follow through, next, Monday would be, added confirmation, of course. We would definitely want to have that stop loss. I would like that stop band below probably that
You're going to want
Wednesday
to get
low.
under the base. You're not going to be able to.
And that's going to be the problem.
You have to start breakout channel on here.
Yeah, and I think you can. I think you could go below the 9/today's low.
I think so.
And while I'd be more comfortable and confident in the base, of course, more is better, right? It also costs more. I think it is absolutely worth stacking up against other candidates. I would not. I would say that I want this one to go to the second round and match him up
just
against
because
who else
it's
got
named
through.
Tyler's Technologies. Like it. Coach Frank, this is another edition of the Halftime Report presented by Tackle Trading. We're in the books for Friday, November 12th. It's been a fantastic discussion with my good friend and master technician himself, the Breakout King, Frank Starts. Frank
Been
Martin.
a pleasure.
Frank,
Been a pleasure as always.
Thoughts to you, my friend.
Just keep doing what you're doing, right? Don't go against the trend. Go with the market, go with your charts, trade within your rules and systems. Don't over leverage, but if you see a good trading situation, take advantage of it, right? I know sometimes whenever you see any selling in the market, especially if you're newer, you wonder if this is the time that it's the end. It might be. Sooner or later it will be, but it probably isn't this time, right? It's usually the trend is going to win out in the end. So try not to let, fear of, well, what if this is the top type of stuff, which we can all do, right? If we're not careful. That's why we have rules. That's why we have position sizing in place. If you see a good trade, take a good trade, especially if you're a directional trader like me. It's a pure numbers game, right? For us directional traders, we win some, lose some, but we think if we're doing our job right over time, the good is going to outweigh the bad. We need those numbers for that to be the case, right? So make sure you're following your rules and your systems, but not being afraid to make those decisions in the face of pullback analysis in the market, which again, some people don't have problems with that. But when I was newer, I would think that, and I know I'm not alone in that regard. Well, what if this is the top, right? And it can get you.
It certainly can, but I think You know, I have this thing I say quite a bit, and it's a lot of it is due to some of the emotion we all have as traders,
Sure.
right? We start getting emotional about pullbacks, breakouts, reward risk, all that jazz, probability analysis. It's simple for me. The market environment is as such as if you see a trade, you take a trade.
Yep.
And that's if the numbers play out, there's nothing in the back of your mind saying, well, what about this? What about that? What about this? What about that? That's priced into the market. Those things are priced into the market.
Yep.
We're dealing with a little bit of slowing momentum here, but the markets are improving on the back half of this week. Very simple for us tonight at Tackle Trading. Women in Trading, everybody, with the amazing Coach M. She's going to be hosting another edition of Women in Trading, so check that out. It's in the Tackle Today, which is our blog and the email we send out to our community, letting them know of everything we're putting out there: blogs, webinars, shows, you name it. And then obviously for you and me, Frankie, it's our time to go over there in the Scouting Report meeting where we're
Excited
going
about
to
it.
dial in all the rankings in our Tackle Trading newsletter. We're going to finalize those watch list candidates in the stock and the options report. We're going to dial those in as well. So Team Tackle Trading newsletter with rapid fire coming tomorrow, as well as new additions to the stock, options, and commodity report coming to Tackle Trading tomorrow as well. From us at Tackle Trading to all of you guys in our community, thank you so much for being part of the Tackle Trading community. Thank you for being a member of our amazing trading community. And if you are interested in becoming a part of the Tackle Trading community and becoming a pro member, you can do so by going to tackletrading.com, hitting the storefront, and signing up for a 15-day free trial so you can get access to those awesome scouting reports the coaches of Tackle Trading put together and put out to their community on a weekly basis. And until then, you can always just check out everything we do on our Tackle Trading YouTube channel. So hit that subscribe button and make sure, if you're going to sit here all day with us, hit that like and share. Hang out with us. Love you guys. We'll see you on Monday, same time, same channel.